Welcome to the Daily Market Recap. Today is Tuesday, August 18th, 2026. Wall Street took a breather today as stocks finished lower post-close. Investors juggled economic jitters, rising bond yields, and a sharp spike in crude oil prices that reminded everyone inflation isn't gone yet. Weak retail sales data further dragged on sentiment, cooling down aggressive Fed rate cut hopes. Energy was today's star sector, surging on crude oil gains due to renewed Middle East supply concerns. On the flip side, consumer discretionary and traditional retail felt the heat from soft retail sales, while technology ended mixed as chipmakers tried to offset software drag. Our market sentiment barometer, the Fear and Greed Index, sits at 54 today. That keeps us right in neutral territory. The bulls aren't wildly sprinting, but bears haven't taken over either, leaving traders in a careful wait-and-see mode. Oil prices surged over 2.5% today as tensions in the Middle East remained unresolved. Rising crude immediately boosted energy equities while reigniting inflation anxieties across broader equities, forcing macro traders to quickly reprice near-term bond yields and rate expectations. Fresh economic reports showed U.S. retail sales coming in cooler than expected alongside falling consumer sentiment. While slower growth usually boosts rate cut hopes, rising bond yields today actually lowered the market odds of aggressive Fed monetary easing, keeping stock indices under noticeable pressure. Earnings season continues to show a sharp divide in tech. Companies dominating AI cloud infrastructure are delivering monster growth, whereas legacy ad-supported tech firms are seeing revenue slowdowns. Wall Street is rewarding actionable AI revenue while showing zero patience for companies missing bottom-line estimates. Amylyx Pharmaceuticals went wild today. AMLX jumped following major clinical updates, including completion of the pivotal Phase 3 Lucidity trial for avexitide in post-bariatric hypoglycemia. Investors are buzzing over its GLP-1 receptor antagonist pipeline, sparking heavy volume and analyst upgrades across Wall Street. Haemonetics soared nearly 7% after locking in a major multi-year supply agreement with biopharma titan CSL Limited. CSL Plasma will deploy Haemonetics' Nexus devices across its U.S. plasma centers. Commercial deal validation was music to investors' ears, driving A stock straight into the green zone. Utility provider UGI Corporation caught a massive bid following reports that private equity giant KKR submitted a buyout offer at $42.50 per share. Nothing sparks a rally quite like acquisition rumors, sending retail and institutional buyers scrambling for UGI shares today. On the loser board, fintech favorite Klarna got hammered, dropping over 22%. The buy now pay later company faced intense selling after its earnings report revealed rising credit loss provisions and conservative forward guidance, proving investors won't forgive cautious growth forecasts in this rate environment. Fabrinet experienced a textbook buy the rumor, sell the news event despite beating Q4 estimates with an impressive 45% revenue surge powered by AI data center demand. The stock pulled back as investors took profits following an extraordinary run-up to record valuation levels. Chinese tech heavyweight Baidu fell over 9% post-earnings, although Baidu's AI business hit a landmark milestone by reaching 50% of total revenue. Non-GAAP earnings missed Wall Street expectations by 26% as traditional online ad weakness dragged down overall profitability. Let's check the charts, starting with SPY. The ETF is testing short-term moving averages. Resistance sits overhead between 555 and 560. On the downside, 540 is key support. A break below 540 opens risk to 532, while clearing resistance targets new highs. For the tech-heavy QQQ, bulls are defending 470 support aggressively. If 470 fails, expect downside testing near 462. But if buyers step up and break resistance at 485, we could see a rapid squeeze back toward 500. In small caps, IWM remains highly sensitive to Treasury yields. IWM is battling resistance at $218. A clean breakout above 218 paves the way toward 224, whereas failure to hold 218 support could trigger further consolidation. In crypto, Bitcoin is range-bound near $63,000 amidst modest ETF inflows. BTC faces resistance at $64,000, where a breakout could spark a run towards $67,000. Key downside support sits solid at $61,500. Ethereum is consolidating around $1,900. ETH bulls need to push past the $1,920 to $1,950 resistance zone to regain momentum toward $2,000. Support holds firm at $1,850. The overall altcoin market capitalization is holding above $2.28 trillion, with Bitcoin dominance around 56%. Capital is selectively rotating into Layer 1 tokens and AI protocols, offering traders pockets of strong outperformance. Market sentiment enters tomorrow in cautious balance. Key events to watch include fresh initial jobless claims, comments from Federal Reserve speakers, and weekly crude oil inventory data. any economic surprises could set the direction for the week ahead. That's your daily market recap. If you enjoyed this video and want to stay ahead of Wall Street every single day, smash that like button, hit subscribe, and turn on notifications so you never miss an update.